Let's get a quick check on the Philippine markets as trading resumes this Friday. The Philippine peso opens today slightly stronger at 55.80 to the dollar. And we're still awaiting for the PSEI figures to come in following the Independence Day national holiday. Let's take a look at the Philippine 10-year government bond yields. Slightly inched down last Wednesday to 6.305%, and we're picking up about the same range as of this time. With us now for more is Luis Limlingan, Head of Sales of Regina Capital Development Corporation. Happy Friday, Luis. Welcome back to the program.
Happy Friday, Kathy. Thank you for having me.
Right. You know, a lot has gone on over the past 72 hours or so between the Senate and the House of Representatives. How have all these impacted market sentiment, if at all?
Well, I think so far the impact is quite minimal. Everyone is just watching right now, because I think in the big picture, really, how does it affect the profitability and growth of the companies? I would think that's very minimal. Second, I think it's really the the ability of the administration to push through with their projects as well. So I think really the impact we see, it's not really affecting the market so far. I think people, even when this was ongoing, they considered all possible scenarios, and that's why I think probably what they're seeing right now, it's still within the realm of the possible, the possible paths. I think that they can choose.
Well, what would be a scenario that would concern the markets and probably make people sell?
Well, again, I'm not a political analyst, but I think if there is probably some civil unrest, I think that makes businessmen very wary. So probably those are the things that that can really make investors be on the sidelines, I think. But I think right now they're just being bystanders at this moment, and I think they're just focusing on other bigger pictures that are influencing the impact of the market.
Yeah, such as the U.S. markets, Philippine markets playing catch up with the U.S. inflation data showing a continued downtrend. What's the likelihood of a rate cut from the Fed? And what sort of an impact do you think that will have on the guidance on policy rates by the Bangko Sentral on June 19th?
Well, I think the street view is that for the BSP meeting, there is likely to be a rate cut. Whereas the Fed, I think, is likely to keep rates. In fact, I was reading by some reports, the most notable one I saw from Goldman Sachs is that the Fed might even pause cutting rates until the end of the year. And even if they do so, it's likely that they may cut rates every other month. Whereas the BSP, I think they have room. Probably, if they do cut rates in the next meeting, they're probably going to see how this impacts inflation and the peso. But if all things being equal, I think there's more room for them to keep cutting rates if there's very little impact on both of these.
Looks like we're getting our first read on the markets. It's still up about 0.4% on the PSEI. You know, some of the experts I've spoken with on this same program speak of a decoupling of the Philippines from the U.S. given the continued economic growth, albeit a lot slower, even slower inflation, and a stronger peso, among others. Do you agree that the Philippines might be decoupling at this stage?
Well, for me, to say that you are decoupling means you're disassociating yourself from something, from a relationship. I don't think that is the case. The BSP and the admin also considers what's happening with regard to the Fed and other economies. They keep a watchful eye. I think really what they're seeing is that the U.S. is in a much more fragile state, so to speak, because of the tariffs and other factors, whereas the BSP has more room to cut rates. Now, when we say that they cut rates next week, is it because they decide that they're going to decouple? No, for me, they're looking at the data both in the Philippines and in the U.S., and they decide, well, we are in a much better shape right now to cut rates. So that is our view.
So which leads us to the interest rate differential. Do you think they'd be willing, the Bangko Sentral would be willing to narrow that and even go lower than maybe 75 bips versus the Fed funds rate?
Well, they are probably going to do the math and say that, well, if we cut rates, the interest rate differential between the U.S. and the Philippines and the U.S. will be this much. However, we have to consider two things. One is the inflation, right? If our inflation again is much better than the U.S., then the interest rate differential will be much better. Second, if you're a foreigner, you're also going to consider the forex. So let's just say, for argument's sake, that the BSP and the Philippines and the U.S. almost have the exact same interest rate. But if you know that inflation is much lower in the Philippines and the peso seems to be appreciating relative to the dollar, then it still makes better sense for you to put your money or to keep it in Philippine peso, even if you're getting close to almost the same rate.
Okay, well, we'll keep that in mind then. Thank you so much for joining us, Luis Limlingan of Regina Capital Development Corporation.